All right. It is Wednesday, March 20th. We're halfway through the week, about three-fourths of the way through the month. And we'll do what we always do here, and that's zoom out, looking at the monthly first. We can see monthly still one time framing higher. To see that all-time high up here sitting 42 52.46, but if we look unadjusted, I guess it doesn't change. But for the most part, monthly still looking strong. No real sign of weakness. Like I said, we still need to monitor for the previous day or previous month's open, previous month's high, previous month's close. Right, the previous month's references are going to be kind of key if we are going to get any significant downside. That would be an area where the market would have to kind of reclaim first. So keep those levels handy or marked on your chart, or set up some alerts. Do what you need to do. On the weekly, you can see we're basically an inside week this week. We haven't quite traded past that previous week's high, just sitting here on the inside. You can see the previous week was kind of a doji looking week where the open and the close were very similar. We pretty much traded higher since then, Monday, Tuesday. And so I guess all those people over the weekend that were just assuming that the market was going to crash this week so far have been having to wait on that. And that's a kind of a key thing, right? Regardless of your bias is, you never want to be trading your bias. You want to be trading what the market is telling you, and that's what's happening on the right side of the chart. And remember, like they say, previous results is not indicative of future results or whatever. The same thing, just because it's happened a certain way on the left side of the chart doesn't necessarily mean it's going to happen the same way on the right side of the chart. So you have to be prepared for that. Switching over here to the daily, you can see yesterday we had an outside day where we took the low and the high. We did take the low first and then catch a little bit of a bid. For the most part, we're really just kind of sitting in this balance. Now, if we do adjust for the contract changes here, we can see it kind of moves everything up a little bit. And that's pretty much what we're kind of looking for here. And we can really see, this larger balance kind of developing right on top here. So we're 1, 2, 3, 4, 5, 6, 7, 8, 9, right? 2, 3, 4, 5, 6, 7, 8, 9, 10. You could call this, even if you wanted to, a one big 20-day balance, I guess. I'm kind of drawing it like steps where they're overlapping on top of each other. We're approaching the high of that balance, so be careful, because longer time frame rules of balance will be in play today. Should we get a break to the upside and start to make new all-time highs, I'm going to be looking for confirmation really above this, I would say, 40 level. And we could even give us one of these. It's because we have all these highs right here, 40, 41 level. You really want to see confirmation above that. And by confirmation, I mean like closes above that in order to get that continuation to the upside. That's really what would have to happen. You can see I have a level here, 51.82. Right below that level, I think the market does get a little bit weak, but really not until then. Something I've kind of talked about. Not that there can't be some downside. Obviously, we're trading above that, so there can be some movement lower, about 50 points at this time or 60 points at this time above that. But that's really kind of the confirmation where the market's going to have to break down and get some closes below. And that's, I think, to get acceptance into this lower balance. And acceptance into this lower balance should take us to the opposite side of balance, which would be like 51.18-ish area. And that would start to put us back towards that gap from February. So that's kind of what I'm looking at. Not necessarily that I'm looking for, but that's kind of how I'm envisioning things as far as what has to happen in order for me to start to go with it, right? So until we really start to get some closes below this 51.82, I'm really just thinking that that high that we made in the overnight the all-time high that we made in the overnight is not safe, and that we probably need to go up there and fix it and get some real excess on the high. We don't really have excess on the high, right? This is really kind of an ugly look where we're just like, buyers run out, buyers run out, liquidation, buyers run out, buyers run out. So not really the greatest look for buyers on the upside. And I'd like to see some excess, even if that is a move higher and then back in. It doesn't really matter to me. I just would like to see some excess on the high. Now, if we don't get excess and we start to get these closes below this 51.82, well, then we start to target this previous lower balance, and that's just kind of how it's going to have to play out. Switching over here to the profiles to get a little bit more in-depth view here. And I want to go like this and back adjust these. Just because I think that's kind of what most people are probably doing, is looking at these back adjusted. See, that's weird. You toss on the overnight, and then all of a sudden that high goes away. Exclude the overnight, and then all of a sudden this high's up here. So something's going on with these like contracts. It's just making it really weird. Um, and it's super fucking annoying, if I'm being honest. That's the tricky thing about futures too. The rollover, especially when we're having rollovers like this, and we had this, back when we rolled over to the March contract initially, because of the big discrepancy between the futures contracts, there was, kind of some gaps in the chart and some things we kind of had to work around. So we'll just kind of keep paying attention to that and monitoring that as it goes. But as far as today goes, we do have the FOMC, right? We do have some news at 10:30. We got oil inventory reports, but really the big ticket item is at 2 p.m. where we get Fed Chair Powell coming on. He's going to release the statement at 2, and then 2:30 he's going to start taking the presser and answering questions. Really the key is just to see the kind of language that he offers. Is it going to be hawkish? Is it going to be dovish? And the real thing to pay attention to is how does the market react, right? Regardless of what he says, it's all about what he does that really matters. And so we want to be looking at the market and see how does the market react based off of his statements, and we'll get a better idea or understanding going from there. Now, as far as today goes, we probably won't get a ton of movement into the meeting unless some people have got some insight on what he is going to say. So that's just something that we have to be kind of ready for. Maybe some choppy zones. Maybe we'll be looking to take profit a little bit early. But we can draw a couple conclusions as we did yesterday, right? We had talked about this spike being very weak, that sellers didn't seem very strong, and that seemed like more of a liquidation to end the day than anything. Well, the market opened up. Sellers tried to come in. You see they get jammed up, 45 here and a poor low. We start to rally from there. We rallied above the previous day's value and built value, and then ended the day on a spike, settling yesterday at 51. What was the close yesterday? 52.4175. 41.75. So we can kind of see, finishing kind of at the high of this balance. As far as the overnight session, you see we trade pretty much lower, little 45-degree line kind of coming up. Really, to me, it looks like it wants to maybe relieve some of this tension here. We'll kind of see. We've got that caught VPOC, right? It seems to be the area where everyone's just been buying and buying and buying. No surprise to me. You can see they kind of filled in these weak spots of volume. And yesterday we got the conclusion of our upcoming COT report that will come out this Friday. And so if we take a peek at it here, this is what it looks like, right? And this is where I'm drawing these numbers from, the COT VPOC. So this is that current COT that's going to be coming out this Friday. You can see where the high's at. You can see where the low's at. And you can see the distributions and kind of how they're set up. So that's really what I'm paying attention to. And that's really where we have kind of these levels. That 52.12, it looks to be the low, but as I've been talking about all week, this 52.15 to 52.18 is my kind of line in the sand. Continued closes above that really, to me, shows strength in the market. Below that shows a little bit of weakness. May have to revisit this. And then we have that previous COT VPOC down here, and then another poor low at the COT low. So some references to get cleaned up eventually, but the first ticket item is that 15 to 18 level. You know, you can be bearish all you want, but until the market starts to get below that 52.18 level, it's not going down, right? And we saw, evidence of that yesterday, after it reclaimed the settle on a negative or a +4 day. Boom, the market just basically traded higher for the rest of the day, which was nice because it was easy. So as far as today goes, what I'm kind of looking for is more that continuation, since we did end on a spike, and we talked about this morning, this 41 level. I'd like to see the market really just kind of clean up some of these references, get above that all-time high, get above that overnight high, the Globex overnight high, set a new all-time high and hold above there. So move up here, even if it starts to trade sideways, that would start to show a little bit of acceptance, and get that continuation from there, I think, is where we're really looking for. And so basically I'm going to be using this settle today as an area to start to target, and from above, or to the upside, as far as a target above, I think the level that we had talked about was 52.80. Now that's not, set in stone, and obviously can change, but we'll kind of see. And so we could just put that on with a question mark, because it's really uncertain once we start to break into all-time highs where the market is gonna, try to go, or decidedly move. Yeah, 52.80 is where I had. Now to the downside, it becomes a little bit tricky, because we're basically kind of a peak at the top of value, and a fail here really, to me, is just kind of indicative of weakness. And so below this COT VPOC down to that half back from yesterday, I think is just going to be a chop fest. I think you probably just chop around in here. Not much happening, a little bit of back and forth, and there's not really going to be much action or opportunity inside there. I remember on these big days, I like to look at about 50% of the value area instead of our normal 68. And if we toss that on here, you can see that's basically sitting at about 24. And so below that, we've got a little bit of single prints, or in that we do have some single prints, and those are going to be kind of the key levels as far as, if it does break, do we fill these single prints and trade, back below? We've got these mechanical references that are basically just kind of lined up for us, as far as where the targets down would be, or where selling would have to come through to show strength, right? And then we've got that poor low, of course, sitting at the 95. So really, it's really tough. Really kind of cautious opportunity. fail to fill these singles, I think gives us a nice opportunity. This first set of singles is what I'm talking about. A fail to fill that first set of singles, like off of the 20, gives us a nice move back to that caught VPOC. And, that's kind of what we might want to be looking for today. But if we move lower and start to show acceptance, and we really want to start targeting these lower levels, you just have to remember that it's going to be kind of a cautious look, because heading into the Fed, I don't really think anyone's looking to. I don't really think anyone's really looking to maybe maximize a position or put on that full position, as far as I mean, unless they know something, but as far as like really decide and just for this market to like open up and just start trending in one direction, would be for me a bit surprising, unless it's to the upside. I wouldn't be surprised to see the market open and start to trend to the upside. That wouldn't surprise me at all. But if it just opened and started trending to the downside, I think that would be a bit surprising. And we want to exercise some caution with there, and really below that 20, or below that 15 area, is where I think the momentum starts to pick up, and you start to get some people starting to close some longs, some laggard longs, and you get some liquidation. And then we'll see if there's actual selling at yesterday's low, where we got that poor low and the market just kind of died out. But that is pretty much it, right? We can't be too aggressive today, I think, until after we get some Powell action. I think once we get the Powell action, we will most likely get a little bit more decisive direction. I think the next meeting is not until May, so this will be kind of a deciding factor. There is relative odds that nothing will happen at this meeting, but like I said, the key thing is to just kind of pay attention to what he's talking about and see what kind of direction he's leaning in. Also, you've got to think about it. This is a very political year, and Trump has come out and said that if he were elected president, that Powell's not going to keep his job. So is Powell going to do what he needs to do, like plug in those printers in order to keep Biden in president so he can keep his job? Is he done? He doesn't care about his job. He wants to save the economy. We'll kind of see as the year churns, but it is going to be a very interesting year and tough to be attached to any narrative. One thing I will say is, for those of you guys that have been attached to this downside narrative for, let's make it a little bit easier. Some people have been attached to this short basically since COVID. We did get that drawdown in 2022, which, if you're here with the trade vets, we actually kind of expected it, and we're ready for it. But since October 2022, for the most part, the market's gone up. COVID low down here in 20, market went straight up. So like I said, just because of what's happened on the left side of the chart, or whatever data you may be reading, as far as, oh, well, 1980, this happened. In 2008, this happened. In 2000, this happened. That doesn't necessarily mean that it's going to happen that exact same way again. So pay attention to the right side of the chart and use those data points that you can, right? Even if you're intraday trading, those highs, open, lows, and closes are going to be your best friends for navigating this market correctly. Other than that, you guys have a wonderful day. Make sure you're managing risk and sticking to your trade plan, and I will see you guys tomorrow.